You check your bank account. Your paycheck just hit. $5,000 sitting right there on the screen. You feel wealthier. You are wealthier. Or are you? Here's the thing nobody tells you. That money isn't actually sitting anywhere. It's not in a vault with your name on it. It's not in a server farm in North Carolina. And if you walked into your bank right now and asked for all of it in cash, along with everyone else in your city, the entire financial system would collapse before lunch. Welcome to the most successful illusion in human history. Let's start with something simple. You deposit $100 into your bank account. What happens next feels obvious. The bank takes your cash, puts it somewhere safe, and now you have $100 at the bank. That's the story we tell ourselves. That's the story the bank wants you to believe. But here's what actually happens. The moment your $100 enters the banking system, it splits into two things: the physical cash and the digital record. The cash goes into the bank's reserves. The digital record becomes your account balance. And this is where things get strange, because those two things are no longer the same $100. They've become something else entirely. Your bank is required by law to keep a fraction of deposits on hand. In the United States right now, that fraction is 0%. Let me say that again, 0%. The Federal Reserve eliminated reserve requirements in 2020, and they haven't come back. Technically, your bank doesn't have to keep any of your money. But let's be generous. Let's use the old rules, 10% reserves. You deposit $100, the bank keeps 10 and loans out 90 to someone else. That person takes the $90 and deposits it in their bank. Their bank keeps $9 and loans out 81. That person deposits 81. Their bank keeps 8 and loans out 73. You see where this is going? $100 in physical cash has now created $270 in account balances, and we're only 3 steps in. By the time this process runs its course, that original $100 supports about $1,000 in total deposits across the banking system. Economists call this the money multiplier. They describe it in textbooks like it's a feature. But let's call it what it really is: financial cloning. Now you might be thinking, okay, this is weird, but it works, right? Banks have been doing this for centuries. And you'd be correct. It does work. Right up until the moment everyone wants their money at the same time. This is called a bank run, and it's the nightmare scenario that every financial system is designed to prevent. Because here's the uncomfortable truth. If just 10% of depositors showed up tomorrow and demanded cash, most banks would be insolvent within hours. In 2023, Silicon Valley Bank collapsed in under 48 hours. Customers withdrew $42 billion in a single day. The bank didn't have $42 billion in cash. No bank does. Silicon Valley Bank had assets, bonds, securities, long-term investments. But assets aren't cash, and when everyone wants cash at once, assets become very expensive paperweights. The FDIC stepped in. The government made everyone whole, and the system survived. But here's what nobody said out loud during that crisis. This isn't a bug, it's the design. Let's go deeper. You take out a loan, $50,000 for a car. Where does that money come from? You probably imagine the bank dipping into its reserves, pulling from deposits, transferring wealth from savers to borrowers. That would make sense. That's how it should work. That's not how it works. When a bank gives you a loan, it doesn't take money from anywhere. It just types numbers into a computer. Your account balance goes up by $50,000. That money didn't exist 5 seconds ago. The bank created it out of nothing. You now owe the bank $50,000 plus interest. The bank now has a $50,000 asset on its books, your promise to pay. And the entire economy treats this new $50,000 like it's real, because in every way that matters, it is. You spend the $50,000 on a car. The dealership deposits it. Their bank can now lend out $45,000 of it. That borrower spends $45,000. That gets deposited somewhere else, and on and on.
One loan has now created nearly $200,000 in perceived wealth across the economy, and it all started with a keystroke. The dollars never moved, they multiplied, and none of it exists outside the banking system. This is why people get confused when they hear about money printing. They imagine the Treasury Department cranking up the printing presses, churning out bills, flooding the economy with paper. That happens, but it's not the real story. The real money creation doesn't happen at the Bureau of Engraving. It happens at your local bank every time someone signs a loan agreement. In the United States, physical currency, actual paper bills and coins, makes up less than 10% of the total money supply. The rest is digital, account balances, ledger entries, promises between banks. And those promises only work because everyone has agreed to pretend they're the same as cash. But they're not. Cash is final. If you hand someone a $20 bill, the transaction is over. No counterparty risk, no bank in the middle. That $20 is theirs, fully and completely. Digital money is different. It's a claim on cash, a promise that if you ever want to convert your balance into physical currency, the bank will do it. But the bank is counting on you never asking, because if you do ask, along with everyone else, the promise breaks. This system has a name, fractional reserve banking, and it's not a conspiracy, it's not a secret. Every economics textbook explains it. Central banks publish papers about it. It's legal, it's regulated, it's how the modern world works. But it's also completely insane. Think about what we've built, an entire economy running on money that doesn't exist, created by banks that don't have it, backed by promises that can't be kept if anyone actually tests them. And the only reason it works is because we've all agreed not to test it at the same time. It's like a game of musical chairs, except there's one chair for every 10 people, and the music never stops. As long as everyone stays calm and keeps dancing, everything is fine. So what happens if the music stops? That's what 2008 was. Lehman Brothers collapsed, credit markets froze, banks stopped trusting each other, and suddenly everyone realized the money they thought existed was just a series of IOUs backed by other IOUs all the way down. The government stepped in with $700 billion in bailouts. The Federal Reserve created trillions more in emergency lending, and the system survived, barely. But here's the part that should terrify you. That bailout money, those trillions in emergency funds, where did they come from? The same place your car loan came from. A computer, a keystroke, more promises layered on top of the old promises. We saved the banking system by doing more of the thing that broke it in the first place. And it's still happening. Right now, as you listen to this, banks are creating money. Loans are being approved. Deposits are being multiplied. The money supply is expanding. Not because anyone decided to print more cash, but because the system is designed to grow. This isn't sustainable forever. At some point, the gap between actual wealth and digital claims on wealth becomes too large. At some point, someone asks for their money and the illusion cracks. Maybe it's another bank run. Maybe it's inflation spiraling out of control as all that created money chases too few goods. Or maybe it just keeps working. Maybe we keep dancing. Maybe the music never stops. Here's the final thing to understand. This system makes certain people rich. Banks profit from loans they didn't fund. Governments spend money they didn't earn. Asset owners watch their wealth multiply as new money bids up the price of everything scarce. And the rest of us are told our account balances represent purchasing power, security, savings. We work for dollars that are created out of thin air. We save in a currency that's being diluted every time someone signs a loan agreement. And we trust that when we need our money, it'll be there. It probably will be. For you. Today. But not for everyone. Not all at once. And not forever. So the next time you check your bank account and see that number on the screen, ask yourself, is that money real, or is it just your turn to hold the promise? The dollars never left the banking system. They were never there in the first place.